think that Washington can put up a package that's big enough to save this economy?
Well, I mean, it's an interesting question because it all turns on what the definition of saving the economy is. If they can, put up the package that's proposed, the 1.8 trillion, that's probably enough to buy us, another 3 to 6 months. It won't come in time to make a difference for the month of November. But the impact may be starting to be felt by Christmas. But in terms of the long run, the CARES Act, for instance, and the existing program have done very little to lift structural growth for the long term.
So monetary policy has been what has saved the credit markets in a lot of ways, a lot of these bigger businesses that have been able to seek financing. But how would you compare that to all of the access to credit for smaller businesses, as we've seen so many of them shut down already?
Well, I think what the policymakers are doing here is leaving themselves open to another round of criticism, just like they got at the end of the financial crisis, which is, the government programs were designed to bail out the big boys, but they left Main Street behind. And the Main Street lending program has been a disaster. The PPP, which was a great program as an emergency stopgap, of course, is gone. And all the aid to the airlines has been used up. So, we're going to start seeing layoffs here. And structurally, more than half of Americans are employed by small to medium sized business. A lot of those businesses are never coming back. And we have permanently done damage to the job market, which some other industry or future growth is going to have to correct for. And that's going to take a long time.
Now, you call the Main Street lending program a disaster. Is the Fed ultimately able to meet the needs of Main Street?
I don't think the question really is with the Fed as much as it's, in combination with the U.S. Treasury. When you look at how the Main Street lending program was designed, the banks are, sitting in the first loss position, and they have to absorb, a lot of losses if something goes wrong. But yet at the same time, they can't use, nor are they going to be capable of, the underwriting standards that are necessary to make good loans. So I can understand why, the banks aren't having a lot of success with this program because they're guarding their capital. But the other side of it is that, the banks did get a big windfall here, especially those that underwrite securities by the record corporate bond issuance. And we see, fixed income in most of the major banks has been record profitability. I think that there's a sort of a feeling in Washington that there's a quid pro quo here. Look, we did this program that made you a lot of money. You ought to be taking some losses on these Main Street loans. And I think they're at a standoff.
Well, let's talk about the banks for a second here. Some of the banks have said the consumer outlook has gotten a little better for them. But do you think that's selective bias, that the banks have just chosen better customers anyways, and that there's a large part of the economy that's not being seen by the banking system?
Well, there's certainly a large part of the economy that's not being seen by the banking system. And that has been an issue for Chairman Powell and other members at the Federal Reserve because, getting money or capital into inner city communities, minority business, is nowhere similar to the levels that get to other sectors of the economy. So, I think that that structural issue that is basically embedded in the system is going to lead to a lot of more pressure on the view of socialism and other programs, which basically directly protect certain groups of our society.
Some of these big companies that have been borrowing money are also laying off a lot of people. Are you seeing that more largely, that a lot of the companies that are borrowing money or have done it to stay alive, are they able to use this to really prop up the economy? Or is all of that money going into corporate America falling short in that regard?
Well, to this point, there's been very little need for corporate America to borrow money for any sort of capital investment or anything else. And most of it is just to cover cash flow problems. We look at large companies like Boeing, they're just one of many. We look at the hospitality industry, the hotelers. There are just any number of industries that are not making money, and they're trying to get enough cash so they can survive for a length of time. I saw an interview yesterday with the CEO of Royal Caribbean, and they said, based upon the current level of traffic for them, that they have enough cash to maybe survive for another year. Of course, they're counting on a turnaround and increased travel. And a lot of these companies are basically holding excess cash in order to protect them in the event of
Scott,
cash flow pressure.